Good morning, sir. This side Darshan Jinswade from FA1, and I'm going to present the presentation on the topic of is commercialization inevitable? So, microfinance started with the very simple and the powerful idea. So, to help the poor people who could get the loans from the banks, many people in rural areas or low income group were ignored by the traditional banks because they did not have proper documentation, regular income, or the property as a collateral. So microfinance institutions were created to solve this problem. So in the beginning, microfinance focused only on the helping people. So the main goal was to reduce poverty and improve lives. So, but over the time, many microfinance institutions started changing. Instead of working only as a social organizations, so they began working like business companies. So this change created an important question, and that the question was: is commercialization necessary for survival or does not destroy the social purpose of microfinance? So in this presentation, we are going to understand about what is microfinance and how it was started, so why commercialization happened and its benefits, and also the risks and whether really it is unavoidable. So let's start. Now I will move to the second slide. So in this slide we will talk about the microfinance. So what is meant by microfinance? So this means gives a small loans and the other financial services like savings, insurance and credit to the poor people who cannot access the banks. So many poor peoples do not have bank accounts, do not have their documents, do not have collateral for their loans, and also work in informal jobs. So because of this, the bank refused to give them loans. So microfinance started in the 1970s as a social movement. So the idea was simple. If the poor people get small loans, they can start small business, earn income and improve their lives. So the main goal of the microfinance is reduction through the financial inclusion. So the microfinance helps people to start small shops, buy farming tools, and also manage medical emergencies and support family expenses and become the financially independent. So the most microfinance clients are low income family, women and rural populations and the small enterprises. So the microfinance was not created to earn profit. It was created to create the social impact. So now I will move to the third slide. So in this slide, I will talk about the early NGO model. So in the beginning, most microfinance institutions worked like NGOs, like non-governmental organization. So they received money from government grants, international agencies, donors, and from the charities. Because of this, they dependent fully on the donations. So so the so the focus always on services first, not profit. So they mainly focused on helping poor people, empowering women, reducing poverty, and the financial inclusion. So, however, the model had some problems. Since they dependent on the donations, the fund were limited, expansion was slow, so they could never serve many people. As demand increased, they did not have enough money to grow. So the NGO model was socially strong but financially weak. And this was about the NGO model. Now I will move towards the fourth slide, where I will talk about what does commercialization means. So commercialization means turning microfinance institutions into business based organization. So instead of depending on the donations, they started to earn profits, cover their own costs, work like financial companies, and they started settling profit targets, hiring professional managers, following proper corporate governance, and also raising their money from investors. So they also take loans from the commercial banks, invest for the private companies, and also this helped them to reduce dependence on the donors. So commercialization allows MFIs to expand faster, serve more people, and they become financially stable. So here the commercialization means becoming financially self-sufficient. So now let's talk about why commercializations become necessary. So today more than 1.4 billion adults in the world do not have the bank accounts. So this is very large number. So donations alone are not enough to serve so many people. So donor funding is limited, unnecessary, and not permanent. So to grow and survive, long-term MFIs need regular and large amount of money. So the commercialization helps them with get stable funding, expand operations, survive during the economic crisis. So without commercial funds, growth will be slow. Many poor people will remain unserved. So the commercialization often become necessary for the sustainability. So here I will talk about the benefits of the commercialization. If done properly, commercialization has many advantages. So first, more capital. So MFIs can raise more money from investors and the banks. This allow them to give more loans. Second, use of technology. They can invest in mobile banking, digital payment, also on in the online system. So this improves efficiency and reduce the cost. So third is better management. So commercial institutions have professional managers, strong governance, better monitoring systems. And fourth, I will talk about the wider outreach. So without more money and the better system, MFIs can serve more customers, enter into the new regions, and reach remote areas. So commercialization can increase impact if managed carefully. So next slide. So here I will talk about the risk of commercialization. So commercialization is also having the serious risk. So first I will talk about the mission drift. In mission drift, MFIs mainly focus more on the profit than the helping the poor people. They may prefer customers who are financially stable, can repay easily, and are less risky. So this means the poor people may be ignored. So high interest rate, to earn more profit, some MFIs may charge very high interest rate. This increase the financial burden on the borrowers. And the third is over lending. To grow quickly, MFIs give too many loans and also loan to the people who cannot repay. So this create the debt trap. And now the last point. So loss of social focus. In this, the original goal of the poverty reduction may become weak. So the commercial pressure can be reduced and the social impacted. So now we will move towards the next slide. So in this slide, we will get to understand missions and drift. So mission drift is the biggest and danger in the commercialization. It happens when MFIs focuses more on the profit and serves rich clients and ignore the poor people. So originally microfinance was for the poor people, but when the profit becomes the main goal, poor clients may be excluded, financial inclusive may reduce, so poverty reduction may become weaker. If this continues, microfinance may become just another business, not a development tool. So this was why mission drift is a serious concern. So here is my last slide where I conclude with the commercialization inevitable. So in conclusion, some level of the commercialization is unavoidable. Without commercialization funds, MFIs cannot grow. They cannot serve millions of people. Also, they can't serve long term. But the commercialization should not destroy the social mission. The best solution is balance. So MFI should earn profit but also protect the poor clients. So maintain affordable interest rates, focus on the social impact. And also profit and the purpose should work together. And commercialization should support poverty reduction, not replace it. So if managed responsibly, commercialization can make microfinance sustainable, scalable and socially impactful. So this was from my side. Thank you.